All right, we are live. So I'm here with Mike Kofahl, a good friend of mine, and he is a loan officer here in Tennessee, although he services several states and he works with Integrity Mortgage. I got that right? Integrity Mortgage.
That's right.
And he's part of what I call a super team, husband and wife team, along with his wife, Lynsi.
Hold on, bro. He said Integrity Mortgage.
I'm so sorry.
that's Lynsi talking over there. Is he getting our company name right?
All right, I'm going outside. That way y'all can do this without me.
Yeah, Mike and Lynsi are, like I said, part of a super team and been a really great help to me in my business. And so just a little bit more about Mike. Mike has been recognized by his peers as being energetic, focused, great math skills, really great attention to detail. And his 17 years of, I got to make sure I got all my notes here, sales and management experience has afforded him the opportunity to do business in over 29 countries, working with hundreds of different nationalities. And his experience with working with people around the world has lent him a better understanding of all kinds of different cultures. And so Mike really values diversity, and he believes that home ownership is for everyone. You agree with that, Mike?
100%. Absolutely. It is my mantra.
I love it. Now, before we jump in too deep, just a little bit from my perspective of what kind of people that Mike and his wife Lynsi are. Just a little kind of an anecdote here. So when I first became a realtor, Mike and I already knew each other, kind of more casual acquaintances from previous work experience. And we happened to have a mutual friend. We saw each other again here in Tennessee at a birthday party. And so got to talking to them, and his wife, Lynsi, found out it was a brand new realtor. And so she offered me all kinds of help and resources that was, really encouraging to me being new. And then last year I had a major injury, and Mike calls me up and sends me Mexican food. And, this is just the kind of people that Lynsi and Mike are. They really care about people and support people. So I want to thank you for that.
Of course, man. Of course.
Yeah.
We love to help, especially our friends.
Yeah. And so, the reason why I love working with people like Mike and Lynsi is because you want to work with people, especially in something like real estate, where you feel like the people actually care about you, because it's a serious transaction. It's a major life transition.
Here we go.
With the cleaning crew coming through. So, and it's just, you don't want just anybody working with you. And so that's why I'm proud to work with these guys. And so, Mike, is there anything I missed? Anything you'd like to tell everybody a little bit more about yourself?
No, I mean, you've introduced my wife. She is the better half of our team. And we have 4 kids. We have 2 boys in college. We have a 9th grader, and we have a 6th grader. So our house is pretty crazy most of the time, but we still manage to get it all done. We love working in this industry, and most of all, we love helping people. And everybody's situation is so unique and so different. There's no one loan that is the same. And, you have everybody's situation is different. So it's we love putting the pieces of the puzzle together for people and helping them achieve that goal of home ownership. That's kind of how we roll around here.
That's awesome. And one other thing I'll say about loan officers and people like Mike is, you're really the front line. A loan file comes in, and, eventually it's going to go into the hands of like underwriters and processors, but you're the person the client is calling saying, what's going on, with my loan. And so I want to commend you on that. I know what you have to deal with. And I know when I've had to call loan officers, going, what's going on? And it's out of their hands. And so I know you guys have to deal with a lot, and it takes a special person and person with a lot of patience and care. So.
Well, thank you very much. It's a big deal. And I tell all my clients, for a lot of people, this is the largest purchase they will ever make. And so the responsibility really is on the loan officer, not just to be able to get the loan done and get their home, but to really educate them about the loan itself, and to keep them up to speed on the progress of the loan. So that just, it comes down to basic communication and having systems in place that, make people, help people, be aware of where we are, and sets the right expectation, for how we get to where we need to go. At the end of the day, the goal is to get it done and to get it done as efficiently as possible. So if we can do that, then we're winning.
Absolutely. And I know you guys do. So real quick, Mike, will you share with us what got you into mortgage lending? I know you have an MBA in finance, but why did you decide to take that into mortgage lending?
It's kind of a combination of things. I worked internationally for about 10 years and kind of the big corporate world. And I really loved working abroad and utilized, my MBA specifically in that role. My wife had been in mortgages for about 8 years. And she just kept on, telling me, Mike, we need to do this together. Let's do this together. And so it was just a good, when it finally came down, it was a good time. And again, being that my background was in finance, it kind of gave me a little bit of kind of a jump start on the whole process and just understanding the nuts and bolts behind, the financing and all of the things that kind of go into it. So not really one thing. I want to say it was just, it was an opportunity arose and it felt like the right time.
Jumped on it. Well, I can tell you, everybody out there, Mike really jumped into it, services a lot of loans, and him and his wife are really killing it here. Well, just give everybody who's listening to this some perspective, because the market is crazy. So from your perspective, especially from a lending perspective, how would you say things have changed in today's market, even versus last year at this time?
Yeah, it's definitely different. If you study the economy, the economy is about ebbs and flows, and the mortgage industry is just an offset of that. A year ago, we saw, the markets, certain markets, the 10-year, the 10-year yields and, kind of where the market really was. And it dropped our interest rates drastically, because of COVID and because, we'd not seen a real spike in inflation for a while. So there were a handful of market conditions that actually set the pace for pretty much what happened last year. There was a lot of uncertainty as it relates to COVID, and there's still a little bit of that there. But because the market was where it was, eventually, and the rates were so low, eventually the market has to correct itself. And so I think now we're in kind of that correction period. But I tell all my buyers and all of my clients, we are still in a historically good market.
Yeah.
Then the historic average for mortgages is around 8%. So if you take, since mortgages have been done, to up until now, you've got an average of about 8%. 20, 30 years ago, people were getting 17%, rate on their mortgages. And then it, slowly came down. So I would say, as far as the market is concerned, it's still a really, really strong market. The difference now is that you're running into a shortage of homes.
That's for sure.
And there's one of the challenges that we're working with our buyers. And one of the ways that we do that in a seller's market is helping them position themselves and working with our realtors to say, okay, what is going to make the strongest case for your buyer? So, whether it's adjusting the amount of down payment that we have, or whether it's changing some of the loan features, or, we have the ability, because of the various loan programs that we have, to make a strong case for our clients and to help our realtors, get the business that they're shooting for their clients. So it is different. It is sometimes it's a bit challenging, but it is the checks and balances of our of our economy is the ebb and flow. And that's, so we're just experiencing that, no different than, any other time in history. It feels more
Right.
real when you're in it.
Yeah, it sure does. And, speaking of that, as far as what you can do for your clients and realtors, can you explain to everybody as well the difference between just like a pre-qualification and an actual underwritten pre-approval?
Yeah, I think because the market is where it is, you have a lot of lenders that are basically kind of taking, they take a client's word for it. You fill out an online application and they're like, oh, I make X amount of dollars. And they, the loan officers kind of go in and they kind of rapid fire this, pre-qualification process. And they're, basically going off of, the word of the buyer, which 99% of the time you've got someone who really is genuinely putting, the answers as their income, correctly. But, the way we qualify income is very different than, in lending. Sometimes the clients don't know exactly what they're qualified for. So, to answer your question, I try to get, as much documentation as possible to verify actual income for the pre-approval, because what you want to be careful of, and a lot of lenders do this, when you hurry that process along, you're not really being honest with, with the client and or your realtor partner. They need to know really,
or maybe even the seller,
or even the seller. Yeah, I mean, everybody is kind of misled. So, like you said, we're the first lines. So, I have a kind of a nerdy policy of mine. I typically try to underwrite most every loan almost before I even send the pre-approval out. So,
can I say something about that?
Yeah, sure.
Yeah. So one of the reasons I asked this is because this is why it's so important that when you're looking at who you hire, it's not just about what are the rates I'm going to get. I mean, you want to work with trustworthy people like Mike, because Mike is going to do things for you that you don't even know you need. And that's just a great example. I mean, there's a really high volume, high productivity realtor out of my firm. And she mentioned just the other day, it's like, look, when I'm receiving a bunch of offers, when I get one that has a pre-approved, underwritten, qualification letter, like that makes a huge difference versus just those like done really fast, to trust the word of the buyer. And
Right.
so that's why I brought that one up, because I knew what I asked you were going to say that.
Yeah.
And
And it doesn't take, I think the thing is, you have to understand, that's a part of understanding the market, because like you said, when you are a seller's agent and you are looking for, you're trusting our word, you're trusting our math and our ability to kind of see, where this loan is going to go. And so, I would say that it is important that your loan officer, whether it be me or whether it be someone else, has the knowledge and has the ability to look into your taxes, look into your pay stubs, look into your W-2s and or your 1099s to determine, what you can really be qualified for. And then you take your tricks in your tool bag and your ability to work within the loan file to just maximize that opportunity for the client.
awesome. Well, this is a big question I wanted to ask you, Mike. A lot of people out there think that their credit is just too poor. They just don't have enough money to buy a house. What would you say to those people?
I would say, there are in a market like we are in, credit is a huge part of lending. And, but a lot of times what people don't understand is that credit can be fixed. And in some cases, credit can be fixed relatively quickly. We have a system that once we pull a client's credit, we can actually determine how much we can increase their credit score within, a series of time frames. So we can determine, if it's just this one trade line that went, into collections accidentally, those things we can get those things fixed in, 3 to 5 days with the right
Amazing.
tools and utilizing our system. Sometimes that, credit that needs a little bit of work, we have a team that we work with that is amazing at getting your credit to where it needs to be. So from a credit standpoint, I would say that is a huge part of being able to purchase right now, because your interest rate is largely contingent upon where your credit is. But there are also other factors that go into getting a good rate and being able to purchase a house. You're having a strong down payment, especially in a seller's market where a lot of people, they might have 20% to put down, but they're kind of thinking, well, I could put 3.5% down or 3% down or 5% down to save this money and just kind of put it over here. So, I would say that having someone that can go in and say, all right, well, this is the difference in your interest rate at 5% down, and this is the difference in your interest rate at 20% down. And these are the implications for both types of scenarios. Both of them, neither one of them are bad, but just helping them navigate, okay, well, what is going to be best? Because I tell my clients, at the end of the day, my goal is to get you that house and for you to pay absolutely as little money to the bank for that property as possible. So,
Love that.
and that's really what it's about. It's like, how can we maximize the amount of money, the hard work, and the money that you spend, the money that you save? How can we maximize that? And so we look at, sometimes we'll look at 10 different scenarios for loan types and, down payments and, just a number of things just to find out what makes that buyer the most comfortable, what makes the client feel good about it, and educating them on what each scenario looks like and how that affects their long-term goal, which is getting the house and getting it paid off.
That's awesome. Love that. Well, thank you for that, Mike. And, speaking of the different loan products, there's so many, FHA, VA, THDA here in Tennessee, conventional loans. Would you kind of just give us a little breakdown about a few of those different loan products and how they work and what they mean to borrowers?
Sure. Well, I tell everybody, a lot of times you'll see advertising for, 2.25% interest rate, and then you hear the little caption behind it, FHA loan,
What's the
15-year
catch?
term. What's the catch? And those aren't, those are legitimate advertisements. They, they can't make that claim that they can do it. But they always say subject to credit approval and subject to this and this and this. So typically your government loans, your FHA, your USDA, your VA loans are going to have better interest rates. The reason they're going to have better interest rates is because the government is actually insuring a portion of that loan in the event of default. So if you get an FHA loan and you get approved at a 2.875% interest rate, which happens. That happens all the time. Even now with our market kind of going up and the rates kind of going up. The reason you're able to get that rate is because the government, the government is going to insure that loan insure a portion of that loan in the event of default. For conventional loans, the interest rates are a little bit higher unless your credit score gets up into that, higher tier, 750, 760 plus. So of course, if you get into the 800, obviously you get a lower rate. But the reason there's nobody really insuring the conventional loan. So when we do a loan and we're a direct lender with Fannie and Freddie, we will, eventually that loan is going to get sold. So we will fund the loan. And then because we are a direct lender with Fannie and Freddie, we're going to wind up selling that loan off to one of their affiliates or themselves. And so when that happens on a conventional loan, there's no government entity backing that loan. So whoever it is that buys it, say it's Penny Mac, Penny Mac is on the hook for that loan in the event of default. So those are some things, as it relates to rates and the different types of loans. But right now, the conventional loans are definitely, the interest rates are going to be a little bit higher than on the government loans. And it's been like that pretty, historically. But people notice it the most when the market starts to correct itself and when rates go up just a little bit. So, but government loans are great. USDA is one of the most underutilized loans. And we have a lot of properties here in Tennessee that fall into USDA category, 0% down, and helping our clients, and like you do, with your clients, every situation is different. So if a client comes in and says, I've got X amount of dollars and, this is what we can kind of contribute to the down payment and or this closing costs, so on and so forth, we can actually kind of steer them. Well, where do you want to, where are you looking to go? And like yourself as a good realtor, your first question is like, all right, well, we've got these things, these are the options. And so, USDA, you don't have to put as much money down because there's no down payment, on the product. Same with FHA and, and VA is the same. So, I would say the main difference, I always kind of break them into two categories, and even though there are a lot of subcategories, it really comes down to you have your government loans and you have your conventional loans. And that's the kind of main difference.
Okay, great. I appreciate that. And so I got to ask, because, this is part of my own curiosity, but what questions do you get asked the most by borrowers?
Oh, wow. Most of the questions that I get, personally, because of our, where we are here in Middle Tennessee, because it's going, the market is as crazy as it is right now, is how can we position ourselves to get the deal, to get the home that we're looking at. And so I always, I tell people, well, every situation is different. Like I said before, every client is different. Every loan is different. And your situation, will really dictate how we steer that narrative. Because at the end of the day, a lot of times we are telling a story. What I'm saying? We are kind of financial detectives to kind of figure out ways around, what about this on your Schedule E, or, you got this, you got this right here in your tax returns. We can definitely utilize this. So things like that, we kind of search out and look for. But at the end of the day, we're telling a story for our clients. And so even though it's the nerdy kind of behind the scenes, but we are telling a story. And then we're going to, our realtor partners like yourself, and we're saying, all right, you're putting an offer in. We have made the best case for this client right here. We feel like this is going to be the strongest approach for them. Would you like for us to call your, the seller's agent? Would you like us to tell them about, the viability of this, this deal? And so, most of my questions kind of are about, how do we get the house based on what we've got? How do we tell a good enough story to win this deal? And so that's right now, the last month, that has been the number one question.
Yeah, I can only imagine. I mean, and for anyone out there who hasn't tried to buy a home in 2021, I don't know what you've been hearing, Mike. I've been in multiple offer scenarios many times. A lot of homes are getting 30 offers in one day, sometimes more. And so, that's makes a lot of sense that you're having borrowers come back and say, how can you help me win?
Right. Absolutely. And I think one of the things that, as a loan officer, there are so many rules in lending. You have Fannie and Freddie's rules that are ever changing. Every week we get a different set of criteria and this and that, and self-employed, borrowers, and then, investment property and secondary homes. And so I would say, having a little bit of a creative element to your loan process is really important. Because again, like I said, I always tell my clients, we get to steer the narrative. You know what I'm saying? We get to help. My goal is to make you look absolutely as amazing as possible to that seller and to that underwriter. And, and it just goes, it kind of trickles down. So, it is challenging sometimes. And, I think it's important for us to be really, really honest with our clients and say, all right, this is, my job is not to tell you what to do. But my job is to give you all of the information and give you my opinion so that you can make a decision that works best for you. One of the creative options we found for a client the other day, they wound up, like you said, in a multiple offer scenario. There were 20 something offers on this property, and they went from actually financing the house because they had a loan, they were pre-approved. I've gone through everything of theirs. It was a really, really great loan. And they wound up having to pay for the house in cash. Well, they didn't want to eat up all their cash long-term. So we went in and we set up a delayed financing option for them, to where as soon as they close on the house in cash, the next day we actually go in and we refinance that mortgage for them so they can get, a good chunk of their money back out just to win the deal. So finding creative solutions is super key in an adverse market, and not adverse in a bad way. Just right now it's a seller's market.
Sure is. Yeah.
Finding ways around, the challenges and being able to get the deals done, I think is key right now.
Yeah. And that's what I hope for anybody watching this. If you're going to try to buy a house, you want somebody like Mike in your corner, because, you need creative solutions right now to be successful purchasing a home. Probably the last thing I want to ask you, as far as my list of questions, Mike, is, there's so many people out there, whether it's the news media or just people talking around the water cooler saying, when's the housing market going to crash? We seem to be, are we on another bubble? When's the bubble going to burst? So what's your perspective from within the lending environment on that?
Well, I'm a big nerd. I follow the market pretty much every morning at 5:30. I'm up and I'm just kind of looking at seeing how things are, ended up the day before and what the projections are for the day. I would say when the housing market crashed before, that was before TRID, that was before, all of the regulations for the SAFE Act came into play, CFPB came, so there are a lot of things.
Can I say one thing about that?
Yeah.
Because what I hear you saying is that the way loans are being done right now are significantly different than back in 2008 when it crashed.
Correct. There are so many more guidelines and rules in place to keep, because really what it came down to is we were putting, in the mortgage business, people were putting, actually I wasn't even in the mortgage business at that time, but people were putting people in homes that they couldn't afford. And they were using these especially financing, programs to make lots and lots of money. And it hurt us really bad. So it hurt everybody,
Yeah.
Our entire country. So now I would say that there are so many safeguards in place. Yes, you're going to see a fluctuation in the market. When inflation goes up, you're going to see it reflect in interest rates. And, when the different markets, you get the 10-year and the 25-year, and you've got all these, like I said, it's a big, it ebb and flows. So you have to, there is going to be fluctuation, but do I foresee there being a crash? No. Do I think the market, and one of the things, our free market economy being able to balance itself out? Yes, 100%. And one of the ways it does that is that interest rates will go up, the Fed will raise rates for a period of time, but at some point they're going to say, hey, well, we can, we need to drop these back down for a period of time. And, how they make those decisions, some of those things we know and some of those things we don't know. But I can say that investing in a home is never a bad option, and so we tell people, don't be scared, and don't, you can't base long-term decisions like that on really on market conditions, because there's so many different ways. Perfect example. I had a client come in, they were wanting to buy an investment property, and the rates were higher, obviously, on investment properties right now. And so we kind of worked out this solution for them to where, they were going to have to do a longer term loan, but, I taught them and showed them how they can actually shorten the term by certain little tricks to paying your mortgage down. And, here's some little bitty things. And this is what the amortization actually looks like if you pay an extra $50 more a month to principal. You're actually paying this rate and you're paying it off in the same amount of time that if you did this term and this, and so, I think, again, it comes down to finding creative solutions. And, as far as the market is concerned, it will fluctuate. It's going to do that, but we are still in a really, really strong market, and it's a great time to purchase.
Absolutely. And I'll tell you what, I looked at the stats just the other day from here in Nashville from March of 2020 to March of 2021, property values are up an average of 14.7%, which is like, if you invest in anything, you'd be ecstatic to see that kind of growth.
Right. Exactly.
Yeah, nothing's got a better proven track record than real estate.
Exactly.
Well, Mike, really appreciate your time, and I'm sure anybody who watches this is going to get a lot of value out of this. How can people reach you, and what are all the states that you service in lending?
Right now, we are licensed in Tennessee, Florida, Georgia, and Alabama. So we work with clients from all 4 states. The majority of our business is in, I would say, actually Tennessee and Georgia, but we do have a growing business in Florida, and Alabama is kind of a new market for us, but we're steadily growing there too. The best way to get a hold of me, it's honestly just to give me a call, shoot me an email. Obviously, if you have questions or anything like that, we'll put our number up there so you can reach us. But there's never a bad question. There's never a dumb question. I'll get clients that'll call me, I have a dumb question. I'm like, no, there's no dumb questions. Let's dive into it, and let's get them all answered. That way we can, make informed decisions and move forward.
Awesome. Well, is there anything you'd like to put here at cap at the end before we end this call?
Well, I would say, I think we've been friends for a long time, and I would say that your integrity, outside of being a super good looking buff guy, well, right. Stop. No, I would say, Steven's he's just a man of integrity, and he's going to work hard to help you and, to do the right thing, and he's going to be transparent, and he's going to work hard to do a good job for you, which is why you're, always one of our go-to realtors. And we appreciate you, giving us the opportunity to talk to your people. And, I think having a strong team behind you, and having a strong realtor and having a strong lender, is really, really important, especially like we're in right now. And so the last thing, just thank you for allowing me to be here and ramble on a little bit. But
absolutely,
I will say I appreciate all the business that you sent our way, and I love working with your clients, and you're just a man of integrity, and we appreciate that.
Same back at you. All right. Well, give my best to Lynsi, and thanks again. We'll talk to you later. Bye.